This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we're seeing a little bit of profit taking as we inch closer towards that all-important quarterly stocks and acreage number that we're going to get Friday morning out at 11 a.m. Central Time. So we are getting the market to pull back a little bit, but really coming into a good technical support pocket for that December corn contract. 447.5 to 450 represents a key Fibonacci retracement support pocket last week, as well as that psychologically significant 450 level. So if we can maintain price action above here and get a friendly report from the USDA, I wouldn't be surprised to see the prices springboard as we round out this week's trade. Now on the resistance side of things, 462 to 465 has been a little bit of a brick wall here over the last week. If we can get a conviction closeout above here, I wouldn't be surprised to see new highs in a relatively short amount of time. That comes in 473 and above. Interesting to note going forward, weather's cleared up a little bit, which means we're probably going to see a uptick in crop ratings, so something to keep an eye on going into next week's crop progress reports. Now, moving over to the soybean market, soybeans, 915 was a huge pocket for us. This represented the 100-day moving average as well as a 50% retracement from the contract highs to the contract lows. We broke down below that, and I think a lot of that was on some jawboning from Larry Kudlow, suggesting that we are going to go ahead and implement additional tariffs on the Chinese. And keep in mind, we do have a meeting with the Chinese delegates at the G20 summit here over the weekend. We expect to hear some sort of positive spin from that. But again, until then, we're going to keep our focus on the weather and tomorrow's crop progress report, or acreage and quarterly stocks number. We think that soybeans potentially have room to work higher, but a lot of fundamentals kind of up in the air here in the very near term. Wrapping things up with the wheat market. Wheat we thought was going to be a laggard here this week, but really showing signs of strength, which indicates that we could see this market continue to be a leader. We had a reversal off the early morning highs, which could indicate a little bit of a double top. So ultimately, we're a little bit more neutral on the wheat market. Looking for a pullback is a better buying opportunity for that September Chicago contract. If we get anywhere close to 517 to 520, I think that's where you see a good risk-reward scenario for the bull camp. So that's what we're looking at going into the weekend. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.